Welcome to the Radio Revenue Podcast.
Thanks for having me back. Always good to be here for another deep dive.
Yeah, today we are doing something a little different. We are taking a look at a company that, well, you probably think you know them,
Right.
but the reality on the ground is shifting so fast, it's honestly hard to keep up.
Yeah.
We're talking about DTE Energy.
Yep.
And before you say, oh, the electric company, how boring, let me just stop you right there.
Please do. Because if you think utilities are just about, poles and wires and paying your monthly bill, you are missing one of the most dramatic industrial pivots happening in the U.S. right now.
Exactly. So for this deep dive, we are looking at their 2025 Form 10-K, which was filed just recently here in early 2026. This is the annual report filed with the SEC.
Which is, as you know, my favorite kind of source material.
Oh, I know it is.
It really is. I mean, a press release is just marketing, right? But a 10-K is a legal document.
Yeah.
The company has to tell the truth, the whole truth, and nothing but the truth, or they get in serious trouble with the federal government. So it is absolutely the best place to see what is really happening under the hood.
And what is under the hood of DTE Energy right now is it's fascinating. They're this massive legacy entity based in Detroit, real Motor City roots.
Mm-hmm.
And they're trying to navigate a year where they brought in roughly $15.8 billion in revenue.
Yeah.
But at the same exact time, they are trying to completely reinvent their entire infrastructure before a 2040 deadline. It honestly feels like they're straddling two different dimensions.
That's a perfect way to frame it, actually. On one hand, you have the legacy fossil fuel business that literally built the company.
Right.
And then on the other hand, you have this high-tech green energy future that isn't just some nice corporate goal anymore. It is a legal mandate.
Yeah.
And looking at this 2025 report, you can see the tension between those two worlds in almost every single line item.
So let's unpack this. We have a lot to get through for you today. From heat waves driving profits to cow manure fueling trucks and a really massive bet on AI data centers.
It's a wild ride.
Let's start with the headline numbers, though. 2025 was a pretty good year for DTE, wasn't it?
It was a very solid year. Operating revenues hit approximately $15.8 billion. And just to give you a sense of the trajectory here, their net income rose to $1.46 billion,
Okay.
which is up from $1.40 billion in 2024. And their earnings per share, or EPS, landed at 7.03.
Okay, so they made more money. But the really interesting part is why they made more money. When I was reading through the result of operations section, one thing stood out to me immediately.
Oh, let me guess.
The weather.
Ah, yes. The weather factor.
It just seems so ironic that a utility company, which is, often at the center of climate change discussions, actually had a banner financial year because it was hotter than usual.
It is a bit of a paradox. But in the utility world, weather is destiny. The report explicitly mentions that 2025 saw favorable weather conditions compared to 2024.
Favorable meaning hot.
Favorable meaning a much hotter summer. Exactly.
Yeah.
When the temperature spikes, everyone in Michigan cranks up their air conditioning. And that drives cooling demand, which is essentially just sales volume for DTE Electric.
So while we were all sweating through those brutal heat waves last July and August, DTE's accountants were probably high-fiving.
In a manner of speaking, yeah. Higher demand equals higher revenue without them really having to change their sales strategy.
But it wasn't just the heat, was it?
No, the other major driver was rate implementation.
Meaning the price tag went up?
Exactly. They implemented new rates that contributed a significant chunk, about $194 million, to the increase in electric operating revenues.
Wow.
So when you combine people using more power because of the sheet and paying a higher rate for that power, you get that big revenue bump we saw.
Okay, so that's the money coming in. But before we get into where that money is going, I think it's really important to clarify what DTE actually is, because it's not just one big blob.
No, and that distinction is crucial for understanding their whole strategy. DTE Energy is the parent company. Under that umbrella, you have the two regulated utilities. That's DTE Electric and DTE Gas. These are the ones most listeners know, the ones that send you a bill.
And their profits are capped, right?
Yes, regulated by the government because they operate as monopolies in their specific territories.
But then there's the other side of the house.
Correct, the non-utility businesses. This includes DTE Vantage and their energy trading arm.
So they are essentially hedging their bets.
That is exactly what they are doing. The utilities provide steady, predictable, regulated income. It's safe.
Yeah.
But the non-utility side, that allows for different kinds of growth opportunities. Unregulated projects that can operate all across the country, not just in Michigan.
Giving them a chance for higher returns.
Higher returns in exchange for taking on different types of market risks.
Exactly. We are definitely going to dig into those non-utility projects later because some of them are pretty wild. But first, we have to talk about the heavy lifting, the clean energy transformation.
Oh, this is the absolute heartbeat of the 2025 10K.
It feels less like a corporate initiative and more like a frantic race against the clock. The report mentions legislation passed in Michigan in late 2023 requiring a 100% clean energy portfolio by 2040.
And we need to pause on that for a second. That isn't a nice-to-have suggestion. That is the law.
Yeah.
It dictates their entire spending strategy right now. A 100% clean energy standard by 2040 means they have to fundamentally change how they generate electrons. They literally cannot just burn coal anymore.
Speaking of coal, the exit strategy is laid out pretty clearly in the report. They plan to end the use of coal-fired power plants by 2032, which is coming up fast.
It is very fast in utility years. I mean, think about it. Power plants are built to last 40, 50, 60 years. Shutting them down early is a massive undertaking.
And the 10K highlights two specific massive facilities, the Bell River plant and the Monroe plant.
Right.
And Monroe's the big one, isn't it?
Monroe is massive. It's one of the largest coal plants in the country, and the plan is to retire it fully by 2032. But Bell River is interesting because they aren't just knocking it down. They are converting it from coal to natural gas to leverage the existing infrastructure.
Oh, that makes a lot of sense. Keep the wires, keep the location, just change the fuel source.
Exactly.
But here's the part that always confuses me with utilities. Shutting down a plant that still works seems extremely expensive. Like, you still owe money on it, right?
Yeah.
How do they pay for that without bankrupting you and me, the customers?
That is where something called securitization bonds comes in. The 10K mentions this specifically regarding the retired plants.
Okay, let's unpack this. Securitization bonds, what does that actually mean?
Think of it like refinancing a mortgage or a car loan. Let's say you have an old car, a real gas guzzler, and you still owe money on it, but you absolutely need to buy a new electric car.
Right.
If you just scrapped the old car, you'd still have all that old debt plus the new debt. Securitization allows DTE to essentially bundle that old debt, refinance it at a much lower interest rate because it's backed by specific surcharges on customer bills, and then pay it off over time.
I see.
It lowers the immediate cost impact on customers while allowing the company to retire the old tech and move on.
So it's basically a financial tool to smooth out the transition. Because the transition is really expensive. I saw the capital investment numbers for 2026 through 2030.
Get ready for this.
DTE Electric plans to invest $30 billion.
$30 billion over just 5 years.
That is just a staggering amount of money.
It really is. To put that in perspective, that is more than the GDP of some small countries. And looking at the breakdown is fascinating. $11 billion is just for distribution.
Poles and wires.
Yep, poles and wires. Then $15 billion is for cleaner generation, meaning your solar and wind. And $4 billion for base infrastructure.
It sounds like they are basically rebuilding the entire grid while flying the plane.
That is a brilliant analogy. They have to keep your lights on today while ripping out the backbone of the system, the coal, and replacing it with wind, solar, and batteries.
All while hardening the wires against storms.
Right. It is an engineering marvel, but it is also a huge financial high-wire act.
And while they are doing all that, something completely unexpected popped up in the Outlook section of this report. This is what I'm calling the aha moment of this deep dive.
I think I know exactly where you were going with this.
I'm talking about the data centers.
Yes. This is the detail that jumps right off the page if you are looking for future trends.
So in October 2025, the report says DTE Electric entered into a 1.4 gigawatt data center agreement.
1.4 gigawatts.
Can you contextualize that?
Yeah.
Because to me, 1.4 just sounds like a small number. But in electricity terms?
In electricity terms, it is enormous. Roughly speaking, 1 gigawatt is about what a large nuclear reactor produces, or enough to power several 100,000 homes.
Wow.
DTE signed a deal to provide that much power essentially to one type of customer. Data centers.
That is wild. It's basically a nuclear plant's worth of juice just for servers.
Exactly. And this really speaks to the AI and digital infrastructure boom. We usually talk about AI in terms of software, ChatGPT and all that. But AI lives in physical servers that run incredibly hot and need massive amounts of cooling and power. This 1.4 gigawatt agreement signals that Southeast Michigan is becoming a major hub for this.
And for DTE, this is a massive new steady load, right?
Yeah.
Because homes fluctuate. You turn the lights off when you leave for work.
But a data center runs 204/7. It is a flat line of demand. Utilities absolutely love that, but it also creates a huge challenge. Remember, we just talked about shutting down coal plants.
Right.
Now suddenly you have this massive new source of demand appearing seemingly out of nowhere.
It's a race between supply and demand. But let's look at the other side of the business for a second. DTE Vantage. Because if data centers are the high-tech future, this next part feels surprisingly low-tech. Or maybe biotech is the better word.
I would say biotech is generous, but accurate. You were talking about the RNG projects.
Renewable natural gas. Or, as I like to call it, turning cow burps and trash into money.
That is essentially what it is. Vantage is recovering methane from dairy farms and landfills in 10 different states.
It's just funny to think of a legacy Detroit energy company running dairy farm gas projects in places like Arizona and California.
It is funny, but it's a very smart business play. Methane is a potent greenhouse gas. If you just let it float up from a manure lagoon, it's terrible for the climate.
Right.
But if you capture it, clean it, and put it in a pipeline, it becomes renewable natural gas. You can sell it as fuel for vehicles. And because of credits like the low carbon fuel standard in California, it can be extremely profitable.
It turns a liability, which is pollution, into a highly lucrative asset.
Exactly.
And they are also doing carbon capture, right?
Yes, capturing CO2 from industrial emitters and injecting it deep underground. Again, this leverages their engineering expertise, but applies it to the new carbon economy.
So they aren't just sitting around waiting for the regulated utility to grow.
Not at all. They are actively hunting for these green revenue streams.
Okay, so we have the cash flow, we have the clean energy transition, and we have the data center boom. It all sounds great on paper, but you are the expert here, which means it is your job to be the voice of reason. What could go wrong?
Well, the 10K has a whole section dedicated to this. Item 1A, risk factors, and there are some very serious ones here.
What stands out to you the most?
The biggest tension is reliability versus renewables. The report explicitly mentions the risk of potential capacity constraints in the MISO region.
MISO is the regional grid operator, right?
Right, Mid-Continent Independent System Operator.
So the risk is that the grid might get full, or rather, empty.
Empty is the worry. The risk is that we retire the coal plants, which are dirty, sure, but they are reliable and can run any time before we have enough solar, wind, and battery storage to replace them.
Because the wind doesn't always blow.
And the sun doesn't always shine. If you have a massive heat wave on a cloudy, still day and you've shut down your coal plant, you have a major problem.
And that's where the anxiety comes in, especially if you just signed up a 1.4 gigawatt data center that needs power 24 hours a day, 7 days a week.
Precisely. Connecting those dots is where it gets scary. The grid is becoming more intermittent on the supply side, but far more demanding on the usage side.
And there was the issue of affordability. We talked about that $30 billion investment.
Right. Companies don't just pay for that out of pocket. They recover those costs from you, the customers.
Yeah.
There is a real risk that electricity bills could rise to a point where they become a massive political issue or a burden on the whole economy. The 10K definitely notes this tension.
How are they managing that?
DTE is banking heavily on tax credits, ITCs and PTCs from the federal government to offset a lot of those costs.
So they're hoping Uncle Sam picks up a big chunk of the tab so, Grandma doesn't have to.
Effectively, yes. But if those tax credits go away or change, the math gets much, much harder for the customer.
Wow. And we can't ignore the nuclear elephant in the room either. Fermi 2?
Right. Fermi 2 is a critical asset. It provides over 1,100 megawatts of carbon-free baseload power. It is absolutely essential for that 2040 goal.
But nuclear always carries specific regulatory and safety risks, doesn't it?
Always. If Fermi 2 has an extended unplanned outage, that puts a massive hole in their reliability plan.
So looking at the long-term strategy, net zero by 2050, how do they actually bridge that gap?
The plan involves a real mix. Solar and wind are the bulk of it. But they are also talking heavily about battery storage to smooth out the renewables.
Makes sense.
And looking further out, the report mentions modular nuclear reactors and hydrogen.
Modular nuclear, that sounds like sci-fi to me.
It is the next frontier. Smaller, safer, factory-built reactors, but it's still fairly unproven at this massive commercial scale.
Yet DTE is keeping it on the table.
They have to. They know wind and solar alone might not be enough to run a heavy industrial state like Michigan.
So what does this all mean for you listening right now? We have covered a lot of ground today.
If we synthesize all this, DTE Energy in 2026 is a company trying to do 3 incredibly hard things simultaneously.
Okay, let's hear them.
1, they are decommissioning a massive industrial legacy, the coal fleet, without breaking the bank. 2, they are building a brand new renewable fleet from scratch. And 3, they are trying to power an absolutely exploding demand from data centers and EVs.
Any one of those would be a full-time job for a CEO. Doing all 3 at once is...
Well, ambitious is an understatement.
It is the literal definition of high stakes.
And that brings us to our final thought. We always like to leave you with something to chew on after these deep dives.
Here is what I'm really thinking about. We saw that 1.4 gigawatt data center deal. We know coal is leaving. So the question for you to explore is this. We used to worry that the transition to green energy would be limited by how fast we could build solar panels.
Right, supply chain issues, land use, all of that.
Exactly. But looking at this report, are we actually going to be limited by how much power AI consumes?
That is such a great question. It is a race between a brand new type of supply and a brand new type of demand. And frankly, looking closely at this 10K, I'm not sure which one is going to win. Will the grid of the future be defined by green energy, or will it be defined by the sheer hunger of the digital world?
A race between the sun and the server farms.
Yeah.
I love it. We'll certainly be watching to see how DTE handles it in the next few quarters.
Absolutely.
Well, that is all the time we have for this deep dive. We hope this gave you a clearer picture of what's happening behind the light switch.
Thanks for joining us.
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.